Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys what are the three types of tradings in the stock market. Now there are many types of trading in the stock market, but what I consider the major tradings are there are three types of. One is the short term trading, the other is long term, and the other is day trading. So these are the three types of trading that I suggest are the major uh, tradings in the stock market. So most of you guys might be short term trading, most of you guys might be long term, and some are day tradings. All of them have different concepts and different philosophies, different strategies that you can apply while trading. So it is better that you pick one and trade along that. It's not necessary to trade all of them, because trading all of them can sometimes be difficult and it will confuse you. So I do not day trade. I do not trade daily. I only buy stocks and sell it after some period of time, maybe a month, two, or maybe 3 months. I do short term trading. Now, let me explain what is short term trading, what is long term, and what is day trading. So, a short term trading is that trading in which you buy certain stocks and held it, hold it for a certain period, of hold it for like a month, 2, 3, up to 6 months, maybe 8 months. That is short term trading. And long term trading is when you buy a stock and hold it for a longer period of time. That is 1 year, 2 year, 3 year, 4 year, 5 years, or maybe up to 10 years. So that is long term trading. And day trading is that you buy the stock at a lowest price and sell that stock on the same day at a higher price, maybe after a few hours, 2 hours, 3 hours, or 4 hours. So that is day trading. So you will have to choose which one suit you. Now there are other tradings as well, swing trading, maybe head and shoulder trading, or short positions, short tradings, things like this. So there are also those types of tradings as well, but you'll have to choose out of these which one suits you the best. Myself, I do short term trading. I choose stocks for the short run, like when they are at their lowest in the first week, and after 4 weeks, 5 weeks, or 6 weeks they sell at a higher price. So that is when that type of stocks I usually pick and sell it, because they give me short term profits, and they are I get to not hold my investment for a longer period of time. So I invest for smaller period of time, for shorter period of time, and then after that, and when I see that now it will give me profits, I sell that stock and lock in my profits. So that is short term trading. I usually get into that type of trading, and that is very much profitable to me. You can see, I will explain it to you now as it loads. So this concept is very much is not it's not that much difficult to that difficult to understand. So let me show you in this. If that doesn't load, what is it? Now let's see if the stock is performing like this, and right at this place, at this area, let me mark it. At this area I buy the stock, comes down again, it goes back up. So at this point again I sell the stock. Now if the stock again, I notice something that it's at the downside, I will again buy it here and then sell it here. So this type of trading I do in the stock market. This is short term trading. Short term trading usually involves it most of the time involves technical analysis, all of the major things that needs to be the most important thing is to apply the right strategy at the right time. The reason I've marked this place is that you can see I made this mistake of buying at a high. Again the stock price drops, and again it goes back up, but maybe sometime I sell the stock at this point, not at this point. So these type of mistakes I do usually in the stock market, while I hold certain stocks and while I hold certain stocks in the stock market, because the stock market is unpredictable. I buy on the assumption that this stock might go up, increase in value. So, and instead it goes down a little bit and then it moves upward. So it performs a move like this. So these type of things happen in the stock market. Now in the long run, like in the short run, short term trading, you'll have to worry about the stock prices. You will have to check the stock price, whether the stock price increases in value or decreases, whether how the stock is performing, where does it where will the correction appear in this chart. So you will have to notice all of these things in the short term trading. Now in the long term trading, you won't have to worry about these things, because you'll have to invest once and then sell it when you see that this is now the buyers are willing to pay me a higher price. So that is when you will have to sell it in the long run. So in the short term trading there is more of a headache, and in the long run there is no. But there is also a concept that in the short term trading you will be busy trading, you will be busy noting each and everything, and you will learn more about this. So long term trading, what I consider for myself is that I would buy a stock, held it for 5 years. Unless I have a business, I won't do this. If I have a physical business, I'm doing business, then I would invest in the stock market and not worry about it. If I have a business, I'm doing business, that's when I will have to do this. And if I don't have a business, then I will do short term trading. So short term trading is better when you don't when you are idle and not have a huge business or something like that. So it is good for that reason. Now there are many stocks out of the stock market that you can pick. Those many stocks, different stocks have different strategies, different techniques, different tricks, different technical analysis that you can apply. They all require different trading from you. All of them have different trading styles, so you can choose from whichever stock you like. All of them gives you an option of how you can trade, where you can trade a certain stock. So it all depends upon you which stocks you want to pick. The way I pick stocks is this chart isn't loading right now. If it loaded, I will show you a chart that I buy the stocks based on the 200-day moving average and the Ichimoku cloud. I also use, for the moving average, I also use the parabolic SAR. It usually appears in both the parabolic SAR and the moving average. So in both of the cases I use uh, these two indicators, so they help me a lot. The reason I use 200-day moving average is because when the stock is trading below the 200-day moving average, the candlesticks appear below the mm, on the chart, the candlesticks appear below the 200-day moving average. So I buy a stock, there is usually an assumption that the stock will increase in value after you invest in it. When the stock is below the 200-day moving average, there is a possibility that this stock might increase in value in the future. So you'll have to note each and everything like this. And because short term trading is more profitable than long term trading is more profitable than short term trading. This is the one thing that you'll have to consider while trading in the stock market. This is the most important thing. For the short term trading, it is taxed lower. For the first year it is taxed a bit lower, the second year it's halved, and the third year it's zero. So this is the most profitable thing about trading in the trading as a long term trader. So uh, I guess that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.